September is living up to its reputation as being the worst month for the stock market all year. On Monday, U.S. stocks sank in the biggest sell-off in months, as investors worried that trouble in China could result in a further slowdown in global economic growth. The Dow tumbled 614 points, the S&P 500 dropped 75, the Nasdaq fell 330 points. It's the potential default of Evergrande, China's second biggest property developer, which reverberated throughout global markets. The fear is that if Evergrande doesn't pay its debts, lenders will go into protective mode and turn off the lending spigot, which would curtail corporate spending and thus slow down the economy. Tesla, which has big exposure to the Chinese market, was down nearly 4%. Heavy-duty equipment maker Caterpillar lost about 4.5%. But that wasn't the only thing behind the sell-off, says Andy Capron, co-head of investments at Regent Atlantic Capital.
This is a very risky week. Here's why it's risky. The Federal Reserve is going to meet later this week and likely announce a taper of its big financial stimulus programs. This is a high-risk environment because what we're experiencing around the world, not just in China, but in parts of the U.S. too, is a slowdown in economic activity. The economy is still growing, just not at the same pace as it was 6 months ago. All this happening at once is making investors a little bit skittish.
Bitcoin turned out not to be a place to hide. The value of the cryptocurrency tumbled more than the stock market. The price of Bitcoin fell almost 6.5% to around $44,000. There was one group which rallied despite the market's overall funk. The Biden administration announced plans to ease the travel ban for international travelers who are fully vaccinated. American Airlines was the best performing airline, gaining 3%. After a year and a half of blocking most non-U.S. citizens from traveling to America in a never-before-seen effort to battle the health crisis, the U.S. is finally lifting international travel restrictions, but only for those who are vaccinated. Beginning in early November, most passengers arriving from China, India, Britain, and many other European countries who have received the shot will be allowed to enter, White House Coronavirus Response Coordinator Jeff Zients announced on Monday. There will be some exceptions to the vaccine policy, officials said. Children not yet eligible to be vaccinated will be let in, and the new rules do not yet apply to travelers crossing land borders with Mexico and Canada. The United States currently bars most non-U.S. citizens who have been in Britain, parts of Europe without border controls, Ireland, China, India, South Africa, Iran, and Brazil within the last 14 days. The U.S. has been under intense pressure to ease restrictions, particularly on UK travelers. Travel across the Atlantic is one of the world's busiest and most lucrative international routes. Monday's decision comes ahead of a visit this week to the White House by UK Prime Minister Boris Johnson, where the topic was expected to come up. Britain started allowing fully vaccinated U.S. travelers to enter the country in August. Airlines have been lobbying for an end to the ban for months, which was put in place in the early days of the global health crisis back in 2020, hoping the ban would be lifted for the peak summer vacation season. Now they're looking forward to the lucrative end-of-the-year holiday travel season. Shares of major U.S. airlines with international routes, Delta, American, and United, were mostly higher in midday Monday trading. JetBlue, which just started service to the UK in August, moved slightly to the upside. International Consolidated Airlines Group, parent of British Airways and a host of other European air carriers, surged about 10%.
Cathay Pacific has slashed its outlook for air travel in the coming months. Over the fourth quarter, it now expects to operate just 13% of its pre-crisis capacity. That is down from 30% in earlier forecasts. The Hong Kong airline has been hit by lingering lockdowns. Its home city is under some of the world's toughest travel restrictions. Cathay also suffers from the lack of any domestic air travel market. Now the airline says it will continue to burn through cash at a rate of about $130 million a month for the rest of the year. Passenger numbers were a bit stronger in August, thanks to students travelling from China to the US. But they were still down over 95% on normal times. Cargo was the airline's one bright spot, with demand ramping up to peak season levels. It accounted for 4/5 of the airline's revenue in the first half of the year.
Santa may have his work cut out this year. Demand for toys is at an all-time high, and US suppliers and retailers are racing to outrun severe air, sea and land shipping snarls. The holidays account for a major chunk of the toy industry's nearly $33 billion annual sales. Lego, LOL surprise dolls, Barbies and PlayStations were among top sellers last year. But hitches in logistics could result in empty-handed consumers and lost sales for retailers like Walmart and Target. Health worries have hit port operations in key exporters such as Vietnam. Reuters and analysts have seen gaps in shelves among seasonal items, including school supplies, backpacks, Halloween decor and costumes. 6 leading toy makers have said they're using pricey cargo planes, routing shipments to new seaports and asking retailers like Target to do their own shipping. One expert says the price of cargo flights has more than doubled, and there's little capacity left between now and year's end. In the first 7 months of 2021, US imports of dolls, toys and games averaged $1.8 billion per month, up 50% from the same period in 2019. And industry watchers say 2021 is already seeing record demand. Walmart and Target, which have hired their own ships in the scramble to secure goods, did not comment on holiday toy inventories. Mattel in July warned that its supplies were disrupted when the global health crisis hit ports and plants in Asia, worsening shipping container shortages. Lego said it's not experiencing any significant disruption to overall supply of products because its factories and distribution centres are close to its markets.
Shares in ailing Chinese developer Evergrande plummeted on Monday. The stock closed down by around 10%, hitting 11-year lows. Investors are getting increasingly jittery amid mounting fears of a messy collapse. Evergrande is weighed down by $305 billion in liabilities. Executives have been scrambling to pay its many lenders, suppliers and investors, some of whom have descended on company headquarters to demand their money back. Reuters sources say one of its main lenders has made provisions for losses on loans to the firm. Some creditors are said to be giving it more time to pay. On Sunday, the firm said it was repaying investors in its wealth management products with real estate. Meanwhile, regulators have warned that a default could spark broader risks for the country's financial system if nothing is done. Policymakers have told lenders to extend interest payments or roll over loans. However, market watchers are largely of the view that a direct state bailout is unlikely. Evergrande's woes have pressured the broader sector. Rival property developer Sunac dropped over 10% on Monday, while state-backed Greentown China was down around 7%.